Hello everybody, I'm the Boss Hog, otherwise known as Liam, and these are the stocks that I've been buying this week ending the 26th of February. Let's do it. But before we move on, please like, and to keep up to date with all my content, consider subscribing. Each like means money toward our charities and Tiddlywinkles, who help over 12,000 animals, including hedgehogs, every year. Here's a picture of my pet hedgehog, Euclid. He doesn't need any help, but he looks damn awesome anyway. Okay, so let's have a look at our approach this week. The plan changed midweek, to be honest, following the NASDAQ wobble, for want of a better word. And really, I wanted to add some tech. I only started in December, and when I was looking at what shares to buy, a lot of the tech I just felt was really overpriced. I did pick up some fairly sizable holdings in Cisco and a UK accounting company called Sage. They do sort of IT software for accounting and payroll, that kind of stuff. But really, they're the sort of non-sexy, high-yielding kind of legacy tech stocks, I suppose. So even though tech is 12% of my portfolio, actually 2/3 of that is unsexy tech stocks. So as well as Cisco and Sage, sort of IBM as well, I would class as fairly legacy. So really only 4% of my portfolio is in high growth tech, and that's something I wanted to improve. And also I did want to average up on some recovery stocks, which was my original plan this week. So sort of any leftover, any rounding, I'm going to target a few UK listed recovery stocks and just average up before I believe their price is going to get really expensive. So that's the approach that we're going for this week. Okay, so let's take a look at the summary of what I've actually bought this week. We'll start with the big two, which was basically added to my position in Microsoft. I did already have 2 shares in them at 224, so decided to snap up a couple more shares on their dip down to 232. Originally, I'd hoped to pick this up at 230, but I felt like I was being really stubborn. We'll find out why when we move into the details. And Broadcom is actually a new position I opened, just 1.1 shares, just because they're very expensive shares. And again, this was a share I'd originally hoped to get at 450, but I felt like I'd been forever waiting for a dip that wasn't really coming, so I just seized on this opportunity with a more modest dip to 464. And again, find out why I love Broadcom so much shortly. Then there were some shares I picked up in Evraz, and I'm super bullish about this company. They published their results this week. They yield more than 10% every year. Fantastic. And I think there's still a lot of capital appreciation in there as well. So an iron ore play, picked some more of those up. And the last one was Hollywood Bowl. This is a leisure centre in the UK, just the UK, 50 sites, 10-pin bowling. And again, I averaged up into my stake just because I think it's a great company. Financials are fantastic. And when the UK opens again, I think they're really going to benefit. So if you only came for the summary, then that's it. But if you want to stick around for some more detail, and on this week, some wisdom from an Indy 500 winner, I thought, seeing as we're going American with the stocks, we would go American with the quote as well. So let's have a look at the details. Okay, so just a reminder, we have 2 different ISAs. These are like IRAs, investment accounts for those Americans among my viewers. So first of all, we're going to look at my ISA. So Microsoft, as I mentioned. I think we all know Microsoft, but actually since I started investing, I've become really impressed with their numbers. Azure is growing really rapidly. I suspect it's going to become their largest revenue stream within the next 1 or 2 years, up almost 50%. It's really great. Microsoft really transitioned successfully to a subscription model. Office is up 28%. It's actually super well diversified. I was kind of surprised to realize that gaming already makes up 10% of their revenue. I was quite shocked by just how well Xbox is doing, among a few other things as well. Age of Empires among them. Their last report, just I think of all the tech stocks I sort of digested, I think Microsoft was the most impressive. It just absolutely smashed revenue and profit year on year. And also the free cash flow has been improving. Something I discovered is although the Microsoft only yields less than 1%, their dividend growth has gone up 4-fold in 10 years. So this is something where if I think about an ISA being such a tax efficient wrapper, it really makes sense to have the dividend growth company that Microsoft seems to be turning into. So a bit of a winner for me there to pick up another couple of shares at 232. And yeah, Evraz, like I say, it's an extremely good yielding stock. I believe it's the highest yielding stock for the last 4 years in the FTSE 100. 1 year especially has 17%, but oftentimes it's sort of between 11 and 14%. It's really great. It's a super easy business to understand as well, even for me to get my head around. It's an iron ore play. It's going to be in need as the world recovers. It's used in steel. Ore is at near record levels. I think steel is actually at record levels, and Evraz just hasn't quite benefited in share price yet. I had already planned to average up to about 460 on this stock. Sorry, 560 on this stock. But I was so impressed with their results, I'm more tempted to go up to sort of 600 or even 620. I think it's still got a little while to run. Yeah, the results were just great. And by favourable geopolitical situation here, what I'm really talking about is the fact that China imports a lot of iron ore, and he gets about 50% from Australia. And at the moment, they're continuing to have a bit of a spat, and that's going to benefit sort of more Western companies. Evraz is UK listed, but does a lot of work in sort of Russia, Ukraine, sort of Central Asia, Kazakhstan, etc. But yeah, seemingly a very good company. The results I spent a little bit of time digesting. I was really impressed with everything I read. Okay, and we now move on to my wife's ISA. So first of all, Broadcom. This is the company I had a chance to pick up at $450 in December when I first started investing. I was waiting for a dip. I feel like I've been waiting for a dip since then, so the better part of 3 months. And it finally happened. It didn't go anywhere near as much as I wanted it to go to in terms of that dip, but it had run up to sort of 480 before. So when it went down to sort of 460, I jumped in and managed to secure it at 464. So not quite the dip I was hoping for, but honestly, I looked at the numbers and they were so impressive that I'm quite happy to pay 464. And honestly, having now familiarized myself with those numbers, I'm quite happy to pay up to 500, probably a little higher as well. It's really fantastic. It only spends 48% of its divvy on a really great dividend yield. Over 3% in the American tech sector is pretty rare, I think. It's been growing that quite rapidly too. The 18% earnings per share growth is super fantastic. Free cash flow up 13.5%. It's massively outperforming the sector. I suppose the only negative thing to say is it has been acquiring some more debt. It has been purchasing other businesses to expand its revenue. I'm okay with this. I think the time hasn't yet come for it to slow down, really. And the other thing I really liked about this is when I looked at it, it has a PE ratio of 22 compared to similar sort of high growth techs. It's just so much better and cheaper. So even though it's run up a lot this year, I think it's completely justified. It's a really great company, and I'm quite glad to own it. And honestly, I think I'm going to try and add to it whilst it's still under $500. Because my broker only lets me add in 1/10 of a share, and because Broadcom is such an expensive share, I got 1.1 Broadcom shares, and that left a reasonable amount to pick up in Hollywood Bowl. So I did just that. It's been impacted by the closure in the UK because of COVID. It did manage to open up for about half of last year, and because of that made a £1 million profit, so just about broke even. And although I do expect it to sink to a loss of maybe a few tens of millions this year, it's a really great conservatively run business. It reached maturity in about 2016. Since then, it's just been growing revenue really well. Net profits remain pretty stable around 17%, and now they're at a stage where they're looking to expand once more, so looking to add another 30 venues to their existing 50, and exploring mini golf as a concept as well. So they're looking to open another 3 venues as sort of proof of concept to see if that works as well. So yeah, this for me is actually going to end up quite a long-term hold, I suspect. But I really like the company, and again, I'm pleased to be adding. Even though I'm adding at 230 pence per share currently, my average price is still underneath 200, which to me is just a total winner. Because I think this share price is going to be about 400p in the next few years, so 100% return. So really great. That's the end of my the shares I bought. I did resist buying WH Smith this week. That was one of my planned buys originally, but it just ran up so much during the week. It's now at £20 a share. I was targeting it when it was underneath £17, and I just didn't want to buy that sort of premium when I can buy Hollywood Bowl and Evraz. In fairness, I do think WH Smith is worth about £24 a share, so I think it has still got further to run up. It's just I think a lot of the immediate upside is already baked into the share price. So yeah, those are the 4 shares I bought this week, and now let's move on to our inspirational quote for the week. And here we are. So success is where opportunity and preparation meet. This felt quite apt this week just because I'd sort of prepared exactly the companies I was going to buy, and then there was an end of month spasm, for want of a better word, in the markets, and Nasdaq seemed like a good opportunity to jump in. So there was some opportunistic buys this week, undoubtedly, is where most of the money went, and therefore this quote felt appropriate. I'd not heard of Bobby before. Apparently he's won the Indy 500 9 times, and I'm sure if you're into that, he's a bit of a legend. And in fairness, this is a great quote, so something to sleep on and think about. And thanks for joining me, everybody.